Hey everyone, welcome back to Corporate Decoder. Today, K.A.R.M.A.N Acquisition Corp just filed an 8K announcing separate trading of shares and warrants, and I'm seeing a subtle detail that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing basically signals a new phase for these units, and it is important to understand what that means for investors. So what is happening here is Karman Acquisition Corp, which you might know by its ticker symbol XTERU for their units, has announced that starting the 27th of August 2026, the individual pieces that make up their units will start trading separately. Think of it like this: when you bought a unit initially, it was a bundle. This bundle contained one Class A ordinary share and half of a redeemable warrant. Now, you can choose to keep the bundle, which will still trade under the symbol XTERU, or you can separate them. The Class A ordinary shares will trade under XTER and the warrants will trade under XTER. This is a pretty standard move for special purpose acquisition companies or SPACs after their initial public offering. It gives investors more flexibility to trade the different components of the investment based on their own strategies and market views. The company is essentially giving investors the option to invest in just the shares or just the warrants or keep them together. This can sometimes lead to increased liquidity and price discovery for each component. Warrants, for example, are like options to buy a stock at a certain price in the future. If investors are optimistic about Karman's future prospects, they might buy the warrants hoping the stock price goes above that exercise price of $11.5. On the other hand, if they are more focused on immediate ownership or dividends, they might prefer just the Class A ordinary shares. And for those of you who want to dive deeper into companies like Karman, the tools I use to keep track of these filings and analyze their financial health are available. You can find a direct link to Decoder.report in the description and the pinned comment. It distills complex data like this into a straightforward risk index, red flag scans, and stock printing rates. Add start. Let's jump straight back into it. This move is important because it can affect the price of the units and the individual securities. Sometimes when units split, the underlying shares and warrants can experience volatility as the market figures out their new independent valuations. It also means that holders of the units will need to contact the company's transfer agent, Continental Stock Transfer and Trust Company, if they want to physically separate their units into shares and warrants. This is a procedural step, but it's good to be aware of it. It is also worth noting that K.A.R.M.A.N Acquisition Corp is electing to be treated as an emerging growth company. This means they can use some relaxed reporting requirements compared to larger, more established companies. This is common for SPACs and newer public companies as they navigate their early stages. When we look at the securities registered, we see the units, the Class A ordinary shares, and the redeemable warrants. Each unit is composed of one share and half a warrant. The exercise price for a whole warrant is $11.5. This means if you hold two halves of a warrant, you can buy one Class A ordinary share at $11.5. This is a key detail for anyone holding or considering warrants, as it sets the potential profit margin if the stock price rises significantly above that level. All these securities are listed on the Nasdaq stock market LLC, a major exchange. This generally provides good liquidity and visibility for the stock and its components. Now, while this filing focuses on the trading mechanics, it's also a reminder of the inherent nature of SPACs. They are formed to acquire an existing company. The success of K.A.R.M.A.N Acquisition Corp will ultimately depend on the quality of the business they acquire and their ability to grow that business. The separate trading of shares and warrants is a step in the process, but the real story will be in the execution of their acquisition strategy and the performance of the target company post-merger. What I'm actually looking for is how the market reacts to this separation, and whether it leads to more efficient trading and valuation for the individual components. The risk I am watching is the overall market sentiment towards SPACs, and whether Karman can find a suitable target that can create long-term value for shareholders. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.